Hey guys, Big Jonas here. Happy Saturday night and happy 4th of July for my fellow Americans. Wanted to do a quick Bitcoin update. Been a very interesting week of Bitcoin price action. I am on the weekly chart. I did want to start with our Bollinger Bands here. I talked about this in my last video. The interesting piercing of the lower Bollinger Band we have this week. Notice the last couple times we pierced the lower Bollinger Band, it did mark a low. Lower Bollinger Band pierced, it did mark a low. This was a deviation of that, and as well as this in the depth of the 2022 bear market. But very interesting to note that that has been a very interesting predictability of support, as well as on the upside, where we have every time we breached it here, we came back in, breached it, came back in, rejected, ran up it, broke out of it a little too far. And the fact that we have now used, for now, lower Bollinger Band at support, we want to see our weekly close around 56.5 would be ideal. That would basically allow the theory that the lower Bollinger Band could hold that support like it had done similarly in this run up here. I also wanted to comment on our Ichimoku for the weekly. The Kumu support here, running all the way up, has been broken. That's significant. We had a test candle last week where we pierced it, but we're able to close into it. But now we are well below it, and getting it back over, let's just say 60K would be ideal for that to basically take place. And, looking out into the future of potential support, there's nothing that doesn't say we couldn't backtest this area in the low 40s, but use this area as potential growth, heading into the end of this year and into 2025, using this as support. This is a roadmap that we can use, but we don't want to break through it, obviously, but we want to basically see there could be green pastures ahead using our Ichimoku. We've never really have touched our MA 50 on the way up. We did, touching on the way up as resistance, regaining it as support, and coming close here to actually that back test. Now, what's important about this is we saw how important the resistance of the MA50 on the weekly was coming down here, especially this major rejection at 47K, and then using it as resistance once again, and basically being able to break above it, having used it as support all the way basically the most of this year, 2024. So a back test of that currently at around, let's say, 50K and climbing every week is something we're going to keep an eye on in the coming weeks here. Using it and maintaining the MA50 as support on the weekly chart will definitely be very paramount moving forward there. And lastly, I do want to focus on my two favorite EMAs, EMA 12 and 26. What I find interesting about what we have here is just, I love hiding the price action, right? And just looking at these spaghetti lines here, we can see a couple things. We can see what kind of extremes we can have on the way up, right? And the extremes of bearishness on the way down. You could argue this is another extreme here where we have some of those really high peaks, the EMA 12, way above the 26 here and here and here. So there's a lot of similarities of these tops. What would be challenging and quite scary, and again, we have weeks of this ahead, depending upon what the price action happens, is some sort of bearish cross of these two indicators here. This was such a quick bearish move here, but the deviation between these highs and lows happened so fast that it was one that was reaccumulated. We could basically, see this as like a punk move, if you will, a fake out. But the second bear cross here was really catastrophic for Bitcoin's price action. And then the reject here really brought us down to the depths of our bear market. What was such a great clue was this initial bull cross here back in February of 23, and then more importantly being able to hold that bull cross with the blue cross, just scraping that support there and then using that to run up. So higher time frame weekly chart, very important for the Bitcoin bulls to maintain this bullish cross and not have any kind of bearish cross. But this will take weeks to play out because the indicators are still actually pretty far apart. We'll look at some weekly oscillators as well. This is our weekly CMF, chalk and money flow. We're still very positive here. We have noticed a recent steep decline. And I do notice this kind of tower of 3, 1, 2, and 3. We tend to see things in patterns of 3, so I'm not going to negate that that kind of 3 peaks pattern here, if you will, but still plenty of room here up in the positive. And you can note that being in the negative here, these can be the long-term trend accumulation zones, and they basically have been. These kind of have been times of signaling that the bearishness of the market was actually really interesting, scaling in, by the dip opportunities, and what they eventually would lead to is these tremendous bullish peaks. So we're still on the high end of that CMF peaks we had in the first part of 21's, 64K, and then that later 69K. And then again, the money that came in with the pre ETF news, and then what followed into that was the kind of initial bounce, and then the ETF news that brought us to these highs so far for the year. So that's interesting there. Looking here at our MACD, now a couple things here I want to keep note of. Negative histogram, that's not good. Still very positive here with our indicators, but look at the spread here. You would assume these will eventually kind of level out. We want to see when the weekly candle closes here, our blue line here slowly begin to level out its descent, but right now it's in a free-for-all dive, and so is the trailing indicator here. So this is still kind of a bearish setup here. We've put in consecutive lower lows in our histogram, and until we see some sort of a turnaround in that, remember, we can see the turnaround first in our histo before we see it in our indicators here. So we're going to be interesting to see if we can actually change our deep red to sort of a light red indicator when we close out our weekly candle. This is very important here. Our OBV, going to find it. There it is. I mentioned this on several previous videos. You kind of can't ignore what pattern this looks like here. It's very clean. We have very similar shoulders. We got a great peaky head here. Almost saw something very similar over here back in November of 21. And the reason we call these, head and shoulders an actual pattern is because we have our initial attempt, rejection, we have our higher high, and then we have that breakdown of that, and then the reattempt of the previous area that was resistance that became support, and that actually is what fails. That's when we had that inverse, that head and shoulders pattern. Very similar situation here. One thing the bulls can look at, though, is we have this major area of resistance, and you could argue it's just a back test of that as support. So this is a key area here that we're going to keep an eye on, because what support in this area holding basically means that we confirmed that area of resistance can be now confirmed as support. So we really don't want to break this, and really don't want to close below this area on our weekly candle, maybe heading into next week as well. This is kind of a less perfect looking inverse head and shoulders here, but this is a warning sign here. I always like to see the weekly RSI above 50. We are currently below it just by a bear. Now, we did do some sort of a fake out here. Okay, back in August of 23, when we had that consolidation there, we did definitely dip below 50, but we're able to reaccumulate that, and more importantly, had this little back test right here that was able to confirm that support of 50 and then advancement here. So are we going to get one of those other fake outs here? Want to see where this closes out tomorrow's candle and confirm if we can actually do hold that area of 50 as support. It's our stochastic here, getting real close to the zero line for both of our indicators. Now, just because we get down here and touch this area here does not necessarily mean we have bottomed out or we're kind of bottom out. A lot of these times, even hitting zero, we can double bounce it, double bounce, ride below it. This took almost a month. This took December into almost February before it moved. This took May into July. So these bottoming areas can sometimes take 30, 45, even 60 days here. This could basically be a confirmation potentially of the double bottom. We do that. We use from a time perspective that would fit in that 60-day kind of bottoming pattern here. So we do want to see if we can get that bullish cross that blew over the orange there in our stochastic here. But we are on the low end. You know, when we get up to this high end here, doesn't necessarily mean it's a top area, but a lot of that bullish move has clearly played out. We can definitely see that inverse on the low here. Just because we get that bounce, put in that lower low, doesn't mean we can't have another bounce here and still put in a lower low here. So from a stochastic point of view, this is our line in the sand. We basically want to see these indicators here begin to crawl back up and break this area here. Resistance, this was our previous area here where the bulls petered out. We want to get above that and see if we can break that through. So, oh, and you know, one more thing I want to talk about is one of my favorite indicators here. This is our squeeze momentum. Basically, we make peaks and valleys here. You know, for the first time since November of 23, basically in the year, we're about to lose our mountain range here. We're about to go into the red. Now, these reds can be very shallow, right? Very shallow. Or they can be very long and drawn out periods, you know, of initial bearishness followed by just the slow attempts to basically reconstitute. These are nasty bearish moves here with a lot of volatility. And this is kind of just a consolidation move here. You know, it was in the red, but it really didn't go very deep. We are very close here to putting in our first red histogram. So is this going to be a situation where we get something a little more shallow, like these, or something much more meaningful of a bearish time, which basically was all of 2022. It is notable, though, that we have lost this. And what's very important about this indicator is, as you can see, when we break greens here, it tends to always kind of mark these tops. You know, doesn't mean it's the top, but it is clearly a topping pattern for a time. And that consistently has been the situation, especially having a double one here. You know, you can see it's pretty clear. We get, you know, 2017 was very unique, but the trend kept going there. You know, green, dark green, 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 green, dark green. So I think we're due. I think we're going to slowly crawl into this red area here in this week's candle and then basically following up into next week. So just to recap quickly here, we do have a nice bounce on our wick. We want to find a weekly close would be ideal above 59. We put in a nice little hammer there. But remember, there's a lot of damage kind of done here. With the bounce here at 56 all the way up to 72, we're really back to the all-time highs. It gave it all back, you know, it really did, and put in that lower low. So the chance of that equilibrium, you know, your high, a low, lower high, higher low, that kind of broke here with this week's move. All the FUD happening, Mt. Gox, governments selling Bitcoin, definitely a lot of pressure here. I'd be curious to see if our stock market, which has been on a rip, obviously, if that falls any kind of corrective, you know, 5% move or less or more, very curious to see how Bitcoin responds to that. So Big Jonas here was just a quick update on a Saturday night. I'd be curious to see what our weekly candle closes at tomorrow. Remember, we have a lot of low volatility happening right now, and order books are pretty thin as it appears on the exchanges here. So we're basically just seeing inflows, dumps, and then slow, you know, resets and stuff. But because we broke so bearish so quickly in you know, the Friday candle there, you know, using our RSI, we got way down to like 15 or 14 on the 15-minute. We can see we hadn't really been that low since kind of the nth part of June, and we can see these areas do create bounces. So is this just a short-term oversold bounce that we've seen here from the lows we had on Friday, or is this trying to put in a more meaningful bottom? 8% move, not too shabby, but remember that's coming off you know, 4 days prior to that, a 16% drop. So, you know, we basically got back almost what, exactly 50% ish, of that previous move. but this is where we really need to see if we can break through, especially that 59.60 area, from a psychological standpoint, and more importantly, our bounce we had here on June 24th. This was such a classic V bottom bounce, right? That failed to put in that high there. This was the resistance. This was the support. Lower high, and then we basically put in that lower low. So key area here, right around 58 to 60K. That will be hard for the bulls to break through. Notable if they are able to do it, and notable if they are not. Till next time, Big Tonus. Have a great weekend. Bye.